You know, folks, I'm so thankful for you. We're going to talk about our portfolios today. We're going to both cover the Robinhood portfolio, $37,000, as well as the M1 Finance portfolio in a later video, so stay tuned for that. But for now, let's talk about the Robinhood portfolio. So, try to do these updates relatively regularly. Obviously, a great time being as it's Thanksgiving. Go over some of the stuff that's been happening since the last update we've given out. Couple baselines, obviously, for this portfolio. We started this back in July of 2017, so you have to keep that into consideration. So this portfolio has been rocking for a good 4 years now. Exciting to see that. So almost 4.5 at this point. So we've been having a great time. All time up 87.63% or $17,483. So very nice to see in that. The portfolio has been performing super well. You see a lot better performance really since this 2020 dip here. And prior to that, we were still doing great, but we've seen great gains really in the last year and a half, as really most people have. But we've been doing great things. So hope you're excited, and we're going to go by every single position, show you the cost basis and what we plan on doing with them. So obviously another thing worth mentioning too, kind of the thesis behind this portfolio. I'm pretty well focused on dividends on this one. I've got my own dividend tracker, which you can see every single month. I track the dividends on this portfolio as well as the M1 Finance and see how they're doing in comparison. But if you're worried about some of these statistics here, we've got a 3.16% dividend yield. Very nice to see that. And my yield on cost, because a lot of my cost bases are so low, is actually 5.25%. So that's again a number that looks even better the further we get into this, because that yield on cost continues to really increase as our underlying shares grow in value and continue to pay more in terms of a yield, actually, in terms of a dividend payment. So great to see in that aspect. Annual income, $1,176 in annual income on this portfolio is very nice. I'm very happy about that. Something we look to continue to bolster throughout the given time, and seeing where that really where that takes us in the meantime. I'm excited, and we're headed in the right direction. So let's talk about this. Let's get into it. We have a lot of positions to cover. I've sorted them somewhat by sector for the most part. A couple out of place, but mostly by sector. First here we have Apple. Apple to Apple. We all know Apple. Okay, everyone knows Apple. This has been a position that's been fantastic for me. I've had it for quite a while here. Cost basis, obviously this was purchased way prior to the split, so you see a cost basis here of $47.27 and 21.6 shares. This makes up 9.3% of the portfolio, so a pretty massive portion. And this is a massive portion of our gains as well, $2,482. Which is a 243%, completely even, which is wild, 243% increase. Massive increase on this position, really excited about it. I mean, you love to see it, you really do. Next is going to be another pretty big position here, being Meta Platforms, aka Facebook. Recent name change, still under the ticker symbol FB. Not sure if they're going to be changing it, they haven't said that they will. Would be confusing, I think, to some investors if they did. With that being said, Meta Platforms, what do we have here? Cost basis here, but $167.49. We have 9.18 shares for a diversity of 8.38% of the portfolio. So a pretty massive percentage of the portfolio again, and a really nice gain as well. $1,600 in gains, over 100%, 104% up. So it's been a very nicely performing position for me. Really happy about that one, and I think over the next 5 to 10 years there'll be a lot better performance really coming their way. Microsoft, what a shocker, another really great performance on this one. Average cost basis here 94 cents, or $94.01. Tiny little penny there, nothing crazy. 4.389 shares is pretty minuscule, but still 4% of the portfolio given how much this position's risen in value. Up 1,069%, up 259% total. So really massive gains since I've had this position. Very excited about it for sure. Disney has been an on and off one for me for sure, but still one that I've seen some great value out of. 102.07 is the cost basis on this one. 7.29 shares. at a portfolio diversity of 2.96, just under 3% of the portfolio. Overall gains here, it's $362 or 48%. So not a massive one in terms of gains, actually, but I do think over the long term I like Disney's thesis quite a bit. Next, we have AbbVie. Great position. What can I say? There's a lot of these. I mean, obviously, if they're in my portfolio, I should like all the positions, right? But there you go. AbbVie, 77.51 a share. Really nice dividend yield on this bad boy. 4.8 shares, 1.5% of the portfolio. Total gain of 197 or 52%, really close to 53%. So nice gain. Dividend yield has been fantastic on it as well. Gilead Sciences has been a suspect one for me in recent history for sure. You can see over the last 5 years performance, pretty stagnant. But dividend yield is also very nice on this one. Cost basis of 65.04, 7.4 shares. And a total return pretty minuscule, $36 or 7.49%. Pretty minuscule, but again, dividend yield's been very nice on that one, and we do reinvest every single dividend we get in this portfolio at the moment, so keep that in mind. Ford, this one, obviously, the overall shares will be going up, by the way, because of a new dividend getting paid. I love it. They reinstated the dividend, and as you can see, the stock's been doing great things over the last 3 months, 54% up. Cost basis here of $9.23, 70 total shares. Performance has been fantastic. Was very stagnant for a while. $769 or 119%. So really good performer, and I think over the long term, I do like Ford in terms of its electric vehicle pursuits. New York Community Bank has been since the dawn of the portfolio. Not a lot to say in terms of capital gain, but has been a pretty consistent dividend yielder for us. $10.76 a share, 28.8 shares. Up $57 or 18%, so nothing crazy on NYCB, but we like to see it. It's a decent financial. Another financial here we have is going to be Charles Schwab. Was originally actually TD Ameritrade, which I owned, so you'll see the cost basis is completely messed up. It says it's at 71 cents. Obviously, it's not the case. This was a transfer of the TD Ameritrade shares I had whenever they were bought out by Charles Schwab. 4 shares, though, thanks to that transfer. So can't really look at that total return, but technically on the books it's a 100% gain, but not necessarily that case when you consider where it was. Here we have a retail segment. Position I've really been a fan of is Target here. 96.14 a share. 6.8 shares on this one. Pretty good percentage of the portfolio. Overall up $1,000, $1,044 or 158%, really right around 159. Great performance on Target and a nice dividend yield to really go with it as well. Kohl's more retail here. Another great gain on this one. As you see, Kohl's cost basis here $27.20, 17.2 shares, and overall up $484 or 103%. Anytime you can double your money, you're doing good things in the market. You're definitely doing good things. After them, another retailer, clothing based, with Tapestry. Tapestry was a great position to add in 2019, obviously a scary time in 2020 with them, but has been really great in terms of performance really since then. You look at the last 5 years, and you can see we bought this thing at $17.38 a share. We bought some in the 2020 dip, and we had bought some back in the 20s prior, so our cost basis fell down 22.9 shares. Up overall $612 or 153% is very nice. I love to see it. Tapestry is good, pays a good dividend as well. Then we have an online clothing retailer, a little bit different, Stitch Fix, one that I've definitely missed out on. Unfortunately, this was a position that was over $100 a share at one point, and my cost basis was only $22.89, which I bought back in, I think somewhere right around the 2019 range, I believe, is when I purchased these shares. And I was up massively, and then I didn't sell anything, still at 10 shares here, but we're up still $49 or 21%. I think there'll be another bounce back here coming soon. It's a great company, all things considered. A home improvement retailer here with Home Depot. Literally has been here since the dawn of the portfolio. 1.03 shares, only due to dividend reinvestment. $162.69 a share. Total return here of $257 or 153% has been incredible. So if I had a larger position in this, obviously being a higher share price, when I was starting this portfolio, it was small. Hard to buy a Home Depot share or multiple really at that point. So definitely a regret there, but it's been a great performer. Into some consumer staples here. We've got Coca-Cola. Coca-Cola, pretty steady rock of the portfolio with a good dividend yield, 45.35 a share. 7.5 shares, up $76 or 22%. Nothing crazy. Decent one that's just been steady overall in the long term. Starbucks has been pretty good for me, can't lie to you. 53.44 is my cost basis. 2 shares, 2.05. Overall return of $124. Or up 113% is something I'll take all day of the week. Any day of the week, I guess, is the right way to say that. So, but if you're me, you say it weird. After Starbucks, we've got none other than Irobot. A little bit out of place, I can't lie to you, is Irobot. But that's fine. So Irobot here, cost basis here was $52.38. 9 shares here. Off the initial lot I bought, up $266 or 56.56%. Weird. But if you look over the last year, again, there was a huge selling point for me at $160 plus, and I didn't smell it. I didn't smell it out, and it immediately dipped down, the next day. So should have smelled it that day, and I didn't. Wasn't using my sniffers right. I just wasn't using my sniffers, and I apologize for it. So I hope you're okay with that. Micron, love this position too. Cost basis at 45.22, 10.01 shares. Overall up $413 or 91% it's been nice for me. I mean, I like the position. It's been doing great things. Cisco, really like Cisco quite a bit. I like it. I like Cisco. So Cisco at 39.27 a share. Obviously, the market gain's not crazy. 5.49 shares, up $89 or 41%. But I still like Cisco. It's been all right for me. Again, you have to have a couple of those pretty stagnant stocks in your portfolio to serve as rocks in really uncertain times. So that's kind of one of those for me. Garmin. This was a position that I bought solely to trade an options play that did pan out for me. Cost basis of 81.02, 1.03 shares, up $64 or 76%. A little dyslexic moment there, but that's okay. Good gains. ADI, again, since the dawn of the portfolio here, cost basis of $80.78. I have 1 share. Total return here of 104 or 125%. Seeing some massive gains on some of these, which is very nice. I really like it. Then we have, after them, HPQ. Definitely like HPQ. Definitely was telling people to buy this for a long time, and it didn't pan out for a while. You look over the 5-year history, it wasn't panning out here between this really 2018 time when I bought it to 2019, really through 2020, and then has kind of taken off quite a bit lately. It's been very nice. 18.11 a share, 14.3 shares. Total return of $251 or 96%. So it's been great. I love HP, and the dividend is also nice on it. Very nice on it. Then we have Activision Blizzard. Look, this one has been a stinker lately. You look over the last 3 months, stinker up, down 25%. The last year, down 19%. It's been a stinker. Cost basis of $56.97. Am I considering selling this thing? There's a chance. There's a chance. A lot of CEO controversy right now. We are up technically 2.02 shares, up $8.76 or 7.61%. I could definitely use this $123 elsewhere, and I might do that. Next, we get into our real estate investment trust. We have first here Realty Income. Realty Income has been nice. It's the monthly dividend company. We like it a lot. I'm standing on my chair slightly. I'm like squatting on it. It's very weird positioning for me. So if you saw me raise up, that's why. Rise up, I guess. 55.21 a share. 22.4 shares. Overall total return of $348 or 28% has been very nice. Very big fan of that. After O, we have ONL, the Orion Office REIT, which actually was paid to me via a dividend from O in a spinoff. So we like it a lot. And obviously it's literally free for me. So overall, this market value of $36.70 is free, zero cost basis on it, 2 shares. Just kind of gonna hold it, see what happens to it. Why not? It's free, so we'll take it and obviously enjoy a dividend in the meantime. Iron Mountain, love this position too, and I do. I've talked about it for a long time. $32.47 a share here, 35 shares. We love it. Up $525 or 46%. So good to see. Pays a massive dividend yield, and that's obviously where you see a lot of the gain from. Not necessarily market gain I'm chasing with that one, mostly really in the dividend yield. OHI is one that I've actually purchased recently because it's not quite being great here. The last year down 20%. It's seen some struggles. $28.82 a share, 31.8 shares on this one. I think this is one that's overlooked. We're talking about a stock yielding 10+%. And the core business fundamentals have been plenty fine. Obviously impacted last year, but they've recovered quite a bit. And things are looking good for them. Total return only $13 or 1.47%. Great dividend yield on this one. One that I look to hold long term. I really do. Then we have ABR, the best really just greatness that I've had. And why do I say that? Mostly because of a fantastic dividend yield and great market gain. $9.35 a share, 83.5 shares, with a total return here of $764 or 97%. Really nice. And a yield over right around 10% right now too. This is a stock that has been ridiculous, and it has highly outperformed the S&P 500 over the last 5 years by a large margin, very large margin. So glad to be in that one. Apple Hospitality, one that got schmammered last year, as you might have presumed, with hospitality segments getting smashed. But it's all right. They've returned to paying a dividend, even though it's 1 cent a month. Nothing crazy. 1 cent a share a month. $14.23 is my cost basis. 65.7 shares. Definitely a position I'm fine having. $106 up or 11%. I'm okay. I think they will reinstate the dividend, not this year, but next year. I think they're going to up it first to 5 cents, is where I think the move comes next year. I think that's where they start, and maybe do a full year of that. Then they might go back to the original 10-cent payment that they were doing prior. But I still like the position. Look, I'm fine with it. Then we have ARI, another great position for me. Love it. 1141 is a cost basis, 72.3 shares, yielding right around 10% as well. Up $201 or 24%. Love the yield on this one. Position I love having. And RZ, another great yield. $10.02 a share. 36.5 shares at $44 of gains or 12%. Nothing crazy in the market gain sector, but we'll take it. We'll take the dividend on it. Then we have Prospect Capital, really the last of the REIT stocks here. $5.94 in the cost basis, $47.97 shares, 47.97 shares, up $139 or 48% has been really nice because this is the monthly dividend payer with a good yield to it too. So I love that one as well. Then we get into the ETFs. I blanked on it. Not really going to go into cost basis on ETFs. Nothing's crazy about ETFs. I mean, they're pretty boring. We start off with a new one this year, which is going to be JEPI, the JP Morgan Equity Income Fund. Really nice monthly dividend on that one. I love it a lot. SCHD has been a fund that's consistently outperformed the S&P 500. Historically, just consistently done it. So I love it. Great rock to the portfolio. SPHD, high dividend fund tracking the S&P 500 on some positions. SPYG, S&P 500 growth fund, tracking growth companies. SPYD, another high dividend fund as well. KBWD, monthly dividend payer here, 57.28 shares. It's great stuff. KBWI, also monthly dividends from this ETF, 45.95 shares. USOI is actually a monthly dividend covered call, ETN, focused on oil. 51.2 shares. The yield fluctuates incredibly, but it's a monthly payer at this point, which we'll take. QILD, another monthly dividend payer. You might know QILD. A lot of people are interested in this because it's an income fund. 15.84 shares on this one. It's a new position for me, so keep that in mind. It's been good though. DIV, another dividend fund, super dividend fund, in fact, is what it's titled. 11.62 shares. DES, 2.09 shares. SNSR, Internet of Things Fund, 1 share. Technically over 1 share because of a small yield that it pays, but that's that. Then we get into more of my speculative stocks. Here we go with the speculatives. Now, these are mostly stinkers, except for you have NEO here, which is a big winner for me. I was selling this one a long time ago, 2018, selling this thing. $2.07 a share on NEO. That's right, I have 25 shares. Did previously have 200. Botched it a little bit on the sale. Unfortunately, sold very, very early, under $20. Now, obviously, you see over $40 a share. But the return is magnificent, up 1,900%, or $989. Really nice performance. It's been great for NEO. Then we have one that's recently taken a massive hit, and one that I likely will be buying more of as we go along. So it's going to be Penn National Gaming. Look, I like it a lot. Cost base of $64.15. 3 shares here, down 16.9% or $32. I think this is a great position long term for sports gambling, which has been taking off. And look, it's one I'll be buying in the future because I think it's highly worth it. I don't know what that mumbo jumbo is on the right side of your screen right now, but forget that happened. Then we have Watt. Look, another terrible performer for me. One that I had many occasions to sell when it popped earlier this year, over $7 a share. Cost basis of $279, 75 shares. Total return down 44% or $92. Look, this one's been a stinker. That's why I have pretty small amount of skin in the game on that one. It's a very small position, thankfully. That's what I usually do with my speculative plays. Nothing crazy. Plug Power has been a really good one for me, actually. One that I had originally at a cost basis of $2. I sold out all of my shares there closer to the $15 range. Then I bought back in here, as you can see, right around $25.86. 8 shares here, but I'm up in a span of a month, really, $137 or 67%. I do think I want to hold this thing long term, and I did before, but I had sold out foolishly. Bad decision, but that's okay. I'll be holding it now. New Age Beverage, another massive stinker. Look, this one's one of my biggest fails of all time in the market. The cost basis doesn't exist because they changed from New Age Beverage to New Age, as you can see. It was $2.50. I'll be 100% transparent. I paid $2.50 for this 200 shares here on average. It's terrible position for me. Down massively. I'm down massively. What can I say? So there are some positions holding me back. I can't lie. It's a small position, but still. That is the Robinhood portfolio. I hope you enjoyed this a lot. I hope you continue to follow this, and we're going to continue to have great stuff. You're going to see the M1 Finance portfolio likely on Saturday. I hope you have a great one, and I'll talk to you later.